40-year mortgages are now available, and there's been a lot of frenzy on what this implies. Is it a good thing or is it a bad thing? We want to get to the bottom of that today because you don't want to miss out on a potential opportunity. Or do you? Also, we want to talk about the current real estate trends because there's been some changes in numbers that you might want to keep your eye on, as well as the potential for some amazing real estate opportunities coming later this year if things plan out the way that we talk about. So stay tuned. We're going to get to all of that today. Newski, without further ado, bro, let's get right into it.
Yep, and I will drop the link in the description below for you guys, so make sure you guys check this one out. And I have a feeling you're going to want to actually read into this one. But let's get right into it, right? So the first thing I want to start with is the FHA actually highlighting and giving the green light towards the 40-year mortgage. FHA is Federal Housing Administration. Let's not get that confused with an FHA loan. Okay, those are two different things. I know sometimes as soon as you hear FHA, you just think loan. No, the FHA grants a loan. Let's get that very clear. But let's read this, right? It says, if it helps people get into a house, it's a good thing. Duh, why would it not be a good thing? Clearly, the media is always right. They always know what they're saying, yada, yada, yada. But what I want to do is I just want to play this clip for you guys. And please pay very close attention, right? So let's see what they're saying here. Let's just get the volume up.
Get a mortgage to have my...
So one sec.
We're going to turn now to your pocketbook and the tough decisions so many have in our community of affordability. Can I go out and get a mortgage to have my dream? Well, now a 40-year mortgage becoming a reality in a way to try to get more people into a home.
WPTV News Channel 5's Matt Sesney today looked into what every new buyer needs to know.
Just right there, right? Just pay very close attention to the wording. They're talking about a new home buyer. This is for new home buyers. That's the key word, right? Rel, you keep hearing that?
Definitely.
So if we think about it and you see this on news, you're most likely thinking, yeah, like I could get a 40-year loan right now. It's gonna help reduce my payments because if I could stretch it out, it would make sense. Let's just scroll down a little bit and look into what a 40-year mortgage could really do for you. So when you compare it, so this Bankrate.com recently compared a 30-year and a 40-year mortgage and found out on a $312,000 loan with 6.85 interest, which is pretty good right now considering the market that we're in. The monthly payments were roughly just $2,000 for 30 years and $1,900 for 40. So, well, you're not thinking it's that crazy, right?
It's not that crazy of a difference, nah.
Exactly, but watch this. So when you scroll down, the extra 10 years can add close to $170,000 or more towards your actual loan. $170K more. So yes, in the short term, of course it can make a difference. And their whole thinking behind this is, well, most people actually don't stay in their homes for 30 years. So that's what they're saying here. Especially many homeowners hardly stay in their one house for the first 30 or 40 years. I hear them. But Rel, just without me even going more into detail, what do you think about the 40-year mortgage so far?
I'm not really the biggest fan of it because of that interest that you're talking about. It adds on a whole, bro, 170K more is a lot of money. And just
yeah, nah, that's a lot. And when you think about it, even from my new home buyers, right? Like if you guys are thinking, yeah, I want to get involved and I want to actually take part in this, it's not too bad. This is where you're going to want to stay tuned. So we actually went and did a lot of research behind this to understand, okay, are they really passing a 40-year mortgage? Like I was reading into news, Rel was reading into news, and we're like, it kind of seems too good to be true. So we went to the actual FHA website, guys. Like that's something very normal to do because rather than listen to the media, we were like, let's actually dig into it. There's very key words that you have to pay attention to. The Federal Housing Administration adds a 40-year mortgage. Rel, read that word for me.
Modification.
With partial claim to home retention option for what? What does that say right there, bro?
Struggling borrowers.
Exactly. So when you actually think about it, you guys, I will drop this link in the description below. I don't want to take too much time, but definitely give this a read. What we did is we clicked on this thing right here, right? And it's going to link you to this pretty like detailed little document. So when you actually give this a read, just keep this in mind. April 18th, 2022. So they've been talking about this for quite some time now, right? They were talking about this for a very long time period. But just remember, this 40-year mortgage situation has been going on for a very long time. It's not new. They've been talking about this, right? It's a modification to a loan. It is not an actual loan. And that's what this says right here. The purpose of this mortgage letter is to establish a 40-year loan modification, right? So this was actually back when COVID was going on and everything was just happening. So this is an old plan. This is not anything new. But what people are doing is this. They're coming out here and telling you, yo, you can come out and actually get a new mortgage. So let's just debunk that whole thing. This is for people who are struggling. So when you think about it, and just think in how many people do you know that bought a home in 2020, 2021, 2022, the people that went crazy, right? Guys, inflation is a thing. So, bro, did things not get expensive around us?
Of course, everything is up.
Exactly. So if everything's going crazy right now, bro, and there's a lot of people spending a lot of money on other like cars, for example, food, for example, bro, you really think they're going to be able to actually continue paying for the mortgage, especially if the house prices are decreasing a little bit, especially if inflation's on the rise? Like, do you think that makes sense?
Inflation's on the rise. On top of that, we expect unemployment to pick up later this year and start to enter territories of like 4.5%, especially by the end of the year. So unemployment will rise, which could also affect the ability to pay these loans back.
Exactly. So with all that occurring, this actual affordability thing is pretty damn big for everyone, which is why they came out with a 40-year mortgage again. Remember, it's not this year. This was a conversation last year as well, where they were just basically trying to pass this out to help people out. The goal here is to help people in the short term, but I'm not a big supporter of the 40-year mortgage, just because I'm thinking to myself, like, if I can't afford a 30-year mortgage, I probably shouldn't be getting a 40-year mortgage, just because I understand like the lower monthly payment, but guys, at the end of the day, that's a tactic car salesmen have been using for years and years. Like, oh, y'all will pay a lower monthly rate, but bro, I paid $170,000 more. Does that make any sense?
Yeah, and people try to rationalize it because they think like, all right, yeah, right now I'm paying in the short term and I might be able to like refinance down the line. And so, you know, there's that side to it too that people will bring up. I understand, but like to me, overall, the difference that it makes isn't even worth that, because we just looked at the numbers. The difference it makes between 30 and 40 years isn't even that significant in the first place. Nope,
not at all. So with that being said, what we want to do is now transition over to the actual United States housing market, right? Like the entire country as a whole. But before we do that, please make sure you like this video if you're still watching, and subscribe to the channel because it helps us out. But let's just get right into it. So it says home prices nationwide were down 1.2% year over year in February. The March numbers have not come out yet, so that's what we have right now. We got to roll with it. But just essentially, it says at the same time, the number of houses or homes sold fell basically 22%, and the number of homes for sale rose 16.5%. So let's just look at it, right? The median sales price is $386,000. So it's down 1.2%. As we talked about, the number of homes sold is actually 326,000. And the average fixed rate that you see right now is 6.3%. That's up. Now, Ral, you think it's going up?
Yeah, it's going to go up again. It's probably going to go up again, as we're expecting right now for the Fed to raise interest rates one more time in the May meeting that they're going to have, May 3rd. So this may go back up. And as we see, the fact that interest rates have been rising has been putting downward pressure on these home prices. That's why you see it has a decrease year over year. On top of that, number of homes sold is also decreasing because people are indeed staying put in their homes, and there's not really people that's looking to. The real estate market is pretty much having a slowdown, as we see, based on the interest rates.
That's a fact. So when you guys come down a little bit, remember, we've had this conversation earlier. You're not going to see like, you know, New York on this list, like top 10 metro areas in the US with the fastest growing sales price. You're going to see cities and states where you're not really thinking about. Like you see a lot of Florida, you're going to see a lot of like the southern states like North Carolina, South Carolina, which is all over this list. Let's look at the supply, because well, you want to explain to them like the whole housing market, how it works in terms of supply and demand?
Yeah, most definitely. So it's really the same supply demand economics that we do for everything. So if there's a lower supply of homes, then it's going to put upward pressure on prices. So the lower amount of homes available, the higher each home that is available will be in price. So we want the supply of homes to pick up so that prices can decrease. And so we're really looking to that. And as you see right there, like the number of homes for sale is actually up 16.5% year over year, which shows you that supply is actually picking up. So that now validates the numbers we were just looking at earlier, where you see why prices have decreased. That's because supply has increased, which is kind of what we want to see. Even if you're looking at like median days on the market, right, it's up 27 days year over year. So things are also not leaving the housing market as quick as they were, right? Like there's actually some time for people to sit there and negotiate. Buyers actually now have a little more leverage at the buying table, at the negotiation table, instead of having to be priced out of everything and you have to do $500 million over asking and all that stuff, right? So we're starting to get more supply into the market. Things are starting to finally slow down in the housing market. Finally.
Yeah. Because when you think about it, bro, like when we were looking into buying a house and we were like, yo, this is a good time to buy, we had to step back and reevaluate because it was like, yo, there's so many homes that people are bidding for. And they're bidding because at the end of the day, they kind of don't have a choice. There's like, yo, we're just going to keep going. Like you can't buy any other home, so you're going to have to buy my home. And that's what it came down to. People were selling 100K over or 100K above asking.
Yes, bro. It was ridiculous. It was ridiculous. And even like you were talking about, like even when we're talking about looking for homes, look at the number of newly listed homes.
Yeah, let me click on this real quick. And look at the 5-year gap, guys.
That's insane, bro. That's a crazy drop off, bro. We're talking about a negative 22% decline year over year, right? Negative 22% is down. So people are it's not even a lot of newly listed homes.
Which
like
makes sense. Which actually makes sense because if you think about it, why would I sell my house and pay for a new house with a higher interest rate than what I've been able to get for the last 10 years? It just doesn't make sense. And that's the whole dilemma that we're actually facing right now in the market.
Bro, I'm glad you made that point. You have to think about the type of interest rate people have right now. There's people, because it's not just people who bought a home in the new real estate boom that we had the past few years. It's also people who already always had a home who refinanced. They refinanced to take advantage of the low interest rate. We're talking about people right now who have interest rates of basically around 2%. Like, I don't know if we ever gonna see interest rates that low again. So
we probably will. You know why? Because I think what we're doing is we're just kicking the can down the road, and it's kind of showing with the 40 mortgage, and we're gonna come down to that point where we're gonna have to decrease interest rates again.
Yeah, I mean, hey, listen, it very well might come. Maybe it depends how low they want to drop these interest rates, because the Federal Reserve is in a very tough scenario, because dropping interest rates that low again could now put us into a hyperinflationary type of economy. So they have to be on a balance beam with that. But even if they drop it low again, all right, you're gonna have an equal interest rate because you already caught the lowest that it could possibly be. Let's say it's about 2%. Even if rates drop back to about 2%, you already had that. So it's like most people are just like staying put right now in their home. Why? Because even when they drop interest rates, why the heck would you switch out of that?
Mm-hmm. Yeah, no, that's a fact. It just doesn't make sense, because even if people are like, oh, we're dropping to 3%, I'm still winning. You know what I mean? Like I have to do.
Exactly.
And then we're not gonna go and beat a dead horse here, guys. But we'll drop the link. But just think about it. Demand, homes sold above asking price. We just talked about this. It's went down because now there's a higher supply. It's very simple, just supply and demand. So I won't go into any more detail on this one. But bro, let's talk about what the future holds, right? What do you think is gonna really take place in? I would say let's talk about this year, and then what are your predictions looking like for the next couple of months after this year? Because obviously the recession plays a very long impact into what could happen.
Most definitely. So right now, everybody's looking towards economic numbers to see, are we going to be entering a recession? So everything that comes out from even this week, we have retail sales coming out. Everybody's trying to see like, what are the consumer spending look like to see like, are we entering a recession? But with the yield curves inverted and with all these recessionary signals that we've been getting like this, it's pretty clear that we're most likely entering a recession later this year. It depends how deep the recession will be. I personally think that we're in for something that we don't expect. I think it's going to be a deeper recession. than most people anticipated initially. So if we enter this recession how we will, that's going to bring some opportunities towards the housing market, because recession shows economic slowdown, which shows that demand wanes for pretty much everything. So that means if there's less demand for something, you understand that the prices will continue to drop on these houses. On top of that, the Fed has to cut interest rates, because if they keep interest rates this high and we're in a recession, we're going to enter even more of a deeper recession, because the economy can't handle such high and aggressive rates that we've had. So now you have the combination of the Fed decreasing rates during a recession when the house prices are already low. So you can actually take advantage of a lower interest rate, on top of that, a lower house price. So that's literally the golden spot. You want to buy in a recession. You look into the 2008 financial crisis that happened. People who bought homes in that time period are the people who are wealthy now, the people who actually came out of that winners. You have to buy when everybody's scared. So if I was everybody, I would actually be gathering funds and make sure that I'm able to take advantage of the sweet spot. So when the Fed cuts rates and we're in a recession, that is your sweet spot. Because 2024, you talked about that time period. I believe that the economy is going to start to stimulate again, and we may start to work our way out of the recession. And at that point, especially if inflation starts to pick back up and we work our way out of a recession a little bit, house prices will increase again. So now, yeah, you might still have the lower rates, but now you're going to get a higher house price. So you have to find that sweet spot.
And at the end of the day, I'm glad you said that, bro, because the sweet spot is very important. And at the end of the day, guys, you guys should not be buying a home if you can't afford a home in the first place. Like you should already, whether it's an investment property or whether it's your personal property, you guys have to be able to run the numbers on the actual property itself. I don't care which one it is. If it doesn't make sense in a 30-year mortgage, it doesn't make sense to do a 40-year. Yeah, you can refinance, but in the economy and environment we're in, it doesn't make much sense, right? So that's that part. And just please make sure, do not try to buy a house. I don't even know why I'm saying this, because it's kind of ridiculous, but don't try to buy a house just because you want the house. Like it just does not make sense for you guys. So in terms of the economy, I agree with you. I think a lot of people, and I think Patrick David made this point, will be benefiting. People who are doing their due diligence will be benefiting. People who have been stacking and investing and taking care of their finances will see a very good opportunity in the next couple of months, the next couple of years. So that's my take on it as well. I 100% agree with you, bro. But if you're still watching and you like this type of episode, please like this video, comment your thoughts, and subscribe to the channel. Plus, hit the little notification bell because we drop
2 videos a week.
You don't want to miss them. We appreciate you. We'll check you out on Monday. Until then, peace.
Peace.
Soundstripe.